Greg, you're expecting a major shift into bonds this year. Does China's reopening complicate that move?
I don't think it dramatically complicates the move. Clearly, it puts a little more pressure on inflation, all else equal. But I'm leaning against this whole growth narrative where China opening up is just fueling the global growth outlook. I just don't see it. I don't see the global growth on the other side that China can sell into. So on the margin, it's positive, but I'm a little circumspect around the real dramatic nature of the reopening.
Mo, are you taking the other side of that?
Happy New Year, Jonathan. Nice to have you back on the show today. I would take the other side of that. I think we have underestimated some of the benefits of that increased demand coming from China. And if you kind of look at the performance of emerging markets, even in the last couple of months, we see outperformance relative to developed markets. So in my mind, that's the market telling us that there is some optimism in terms of how the demand picture looks over the next few months, as well as into the mid-year.
So Mo, let's go through your calls. Remain overweight risk via EM and developed ex-US equities. How much of that is just a China call?
Yeah, so China and I would say Europe more broadly, right? So, we see that outperformance, and that's really a call on sentiment. So we saw sentiment improve in December, and that's when we started adding risk back to the portfolio. But we're taking that risk in international markets. We actually think this is the beginning and potentially the year for international markets in outperforming developed markets, the U.S. specifically. And that's been kind of a trade that has, been hurt over the last 10 years. So a lot of the portfolio risk is in international equities and emerging market equities, but we're also adding risky credit. So that's an important factor as well.
Greg, tell me why Mo's wrong.
Well, it definitely hinges upon a pretty rosy outlook. I still think there's a tremendous amount of uncertainty. Yes, I think global central banks are not going to be as aggressive in 2023 as they were in 2022. But there's still this tension point around growth. And I don't think we've seen the full effects yet of this tightening on the growth cycle. So to me, it's somewhat premature. I still think the U.S. wins ultimately here. I think you'll see a flood into the U.S. markets. And I think all else equal, that will drive the U.S. to outperform.